broad problem with inequality, one of them is that we tax capital much less than we tax labour.
You told the Senate inquiry that house prices started to rise at double the rate of incomes as well as double the rate of GDP in 2000. Why is that date so important?
Well, that's just when it happened. So I went looking for why it might have happened then, and the answer, it seemed to me, was the capital gains tax discount, which was introduced or happened on 20th of September 1999. And the thing about that is that up until that point, capital gains tax had been adjusted for inflation, and the inflation rate in 1999 was 1.8%. And the average time for holding an asset, a property, was 8 years, 7 or 8 years. So if you multiply 1.8% by 7 or 8, you get 14%. So the 50% discount that happened in September 1999 was 3 times the adjustment for inflation that it replaced. And the idea of it was that it would encourage people to invest in shares, because shares get the capital gains tax discount as well. And the idea of doing it was to encourage Australians to start investing more in shares. The trouble is that 6 months later, in March 2000, the stock market crashed. The dot-com bubble burst and the stock market crashed. So no one wanted to buy shares anymore. And so what they did was they bought investment properties.
And so in the 2.5 decades since, what has been the impact of capital gains tax, of the discount, on increased demand for property and the price investors are prepared to pay?
Well, look, I'm not saying that it's all about the capital gains tax discount. That happened in 1999, which is when house prices started rising. But I think that as that effect faded, which it would have over time, other things started to come into it, in particular a big rise in immigration in the late 2000s. But the result of all those things was that the house price to income ratio went from around about 3.5 to 4 times in the year 2000 to 8 to 9 times now, so more than double.
You did tell the inquiry today, Alan, that the inequality in Australian society today may have had its origins in the CGT discount. Can you explain to us why you said that?
Well, look, I think, as I say, it's one of the things. I think that the broad problem with inequality, one of them is that we tax capital much less than we tax labour. The people who make capital income are generally rich. People who generally earn all of their money from working are generally less well off. But, you know, the thing is that we actually adjust the capital gains income for inflation, or more than inflation, actually. It's 50%, right? It's supposed to be an adjustment for inflation. But even if you use the current inflation rate, it's double what it needs to be. So we over-adjust capital income for inflation, but we don't adjust labour income for inflation at all. And you know, there was a period in the 70s when income tax scales were adjusted for inflation for about 3 years, but they gave that away. And now we get bracket creep, which is where our incomes rise through the brackets, income tax brackets, just because of inflation, and that's not adjusted. You know, and every now and again we get a tax cut from the government that's supposed to give back bracket creep, but it doesn't really.
If the CGT discount is wound back or abolished, what would be the likely implications for renters, particularly if investors have been accepting a lower rental yield in anticipation of an eventual capital gain?
Well, it probably would make rents go up. That's true. So I think the government needs to address that and think about how that might be addressed in some other way. I think that providing property investors with a 50% discount on their capital gains tax is not the right way to subsidise renters. I mean, as it stands, the average rental yield is about 1% less than the interest on a bank deposit. And so, as you say, property investors are accepting a lower yield, a rental yield, because they expect to not only make a capital gain, they only pay tax on half the capital gain. So they're prepared to accept a lower yield. And if that goes away, if the capital gains tax discount goes away, then they probably will charge higher rents. But I think that needs to be dealt with some other way.
Alan Kohler, great to speak to you.
No worries.